Gary Booysen of Rand Swiss joins us now to talk through those latest market movements and how the JSE ended off the day. Gary, thanks for your time this afternoon. Let's start with the overall market movements. Another day of positivity across trading. Yesterday it was a story about the resources and mining stocks. I'm seeing today industrials doing rather well. What would you say were some of the other contributors to how the JSE ended off the trading day?
So certainly there's a lot going on in markets, and it just feels like we're almost getting a kickback from the trade yesterday. So after a nice recovery in resources yesterday, we had the resource index down about 0.2%. That said, it's kind of isolated really to the gold miners. So we had the likes, gold and platinum miners at least. So we had, Stillwater down around 2.5%, Goldfields also down more than 2%. But the energy companies just going absolutely berserk. So we had Exxaro up over 10%, and this I think is coming just on the rising energy prices that we're seeing as that energy crisis plays out in Europe. Obviously, we've seen incredible gains in the likes of natural gas and coal futures, and that obviously helping to lift that share price as well. Overall, the all-share index up around 0.7%. Local currency, not too much of a move. We're hovering around that 50 rand level, a little bit above, a little bit below, but overall, no big moves in the currency. As I think nerves just settled around some of those international concerns. One, the energy crisis, but also, of course, everyone looking to China and whether we're going to see a disorderly default from that Chinese property company Evergrande.
Let's move on to some local company news now. Netbank releasing a statement earlier today saying that they're going to be offering new credit lines in the form of credit cards to lower income earners. Around 5,000 Rand was what was indicated. I mean, I don't know if it's responsible to be offering this kind of credit, particularly in the time like we are seeing, Gary. Many people will obviously be able to qualify, but whether or not they can maintain these credit offerings is another story.
So it's an interesting perspective. So looking at it, yes, they've moved the minimum for gold card, at least the gold card, down to around 5,000. They're obviously hoping that a lot more people will also qualify for their credit products. And there's two sides to this argument. So on the one hand, it is important to bring the majority of South Africans into the formal regulated credit system. The idea that if you can't access formal credit markets that are regulated, you're going to go to the informal credit markets that can charge you exorbitant rates and generally are not positive for economic development. On the other hand, I think you've hit the nail on the head. Obviously, credit products are high margin, especially the credit cards when you look at what banks charge in terms of credit card interest. And the real key for growth in South Africa is actually to encourage savings rather than the extension of credit. So it would be wonderful if we're seeing Netbank coming to the market with innovative savings products to help South Africans save, but the margin just isn't in it for the banks. So yes, on the one hand, very good that people are moving into the formal credit system, but on the other hand, it would be wonderful to see something that was more positive to South African savings culture.
Right, what about Pepco? I mean, their trading statement was released earlier on today. They're obviously indicating that HIPS is going to be higher. That's because of the improved trading performance compared to full year 2020, which was obviously very deeply impacted by COVID-19 with all those trading restrictions.
Now, so there's no question Pepco is going to be coming off a low base. So this was just a trading statement today. It was a regulatory trading statement as well. So whenever a company is expected to report earnings per share or headline earnings per share above that will increase more than 20%, there's a JSE rule that they have to deliver a trading statement into the market before their results. This is going to cover the full year period up until the 30th of September 2021. As you mentioned, this company coming off a very, very low base. Whenever you read a trading statement, it says we expect a minimum increase of around 20%. That really is them meeting just the minimum regulatory requirements. So the stock has a number of analysts covering it at the moment, and it seems that the consensus expectation for the earnings increase, as I said, coming off that low base, is probably for earnings per share to increase in the region of about 240%. So that's where we are kind of looking for it when the actual results come out. So not much detail in this trading statement. Didn't give us too many clues, but certainly it will be interesting to see when the actual results are released.
Now, here's a story that had a lot of social media users on their knees yesterday, including myself. I think I had a bit of a meltdown. Facebook, WhatsApp, Instagram crashing. Mark Zuckerberg losing about $7 billion from that particular incident. And I was reading earlier on that this is not particularly the first time that the company sees incidents of this nature.
Yeah, so if you look at Down Detector, which is a website that obviously tracks these things, this was one of the, I think this was the largest incident that they've ever had. So, obviously with Facebook being so integrated into global society, if you look at Facebook users, they number about what, 3.5 billion at the moment. So, obviously significant impact globally when something like this happens. But, as you say, incredible hit from the company. So the company's stock was down around 5.5%. But this was in the context of a very weak Nasdaq market last night. We had Twitter, which was actually up as a platform. Their stock was actually down more than 6%. We're seeing a bounce back both in Facebook and Twitter today. So a lot of social media companies rallying in the US. Facebook up about 2%. So as you mentioned, big losses for the company. The estimates that I've seen is it was losing around at least $545 billion per hour that it was down, which is just absolutely spectacular. But again, you've got to look at the business model of these companies. You as the user of Facebook are not the real end customer. You're just the product that they're selling, and their customers are actually the marketers that advertise to you. So will the fact that Facebook went down for a couple of hours yesterday, Facebook, Instagram, and Messenger, obviously WhatsApp as well, part of the same company, will that influence marketers not to use the platform in future? Probably not. We'll probably see people continuing to use it just because of that wide reach. So yes, a revenue impact in the short term, but longer term, I don't think this really changes the dynamic of the company. I don't think they're going to lose their customers, which are those marketers, just because they went down for a couple of hours.
Very interesting insights then. Of course, Twitter had a lovely rally, as you've mentioned, because of what happened with that platform yesterday. Gary Booysen, as always, thank you for your time this afternoon. Gary Booysen talking us through the latest market movements and, of course, how the JSE ended off the trading day.